In this video, I'm going to show you exactly how to protect yourself from pump and dumps using a real case study, AUUD. This stock was up nearly 100% pre-market yesterday and went all the way from $4 to $10 in the first 15 minutes of the open, as you can see here, and dumped all the way back to $4. I'm making this video because this is where I used to get trapped, and this is where most retail traders lose money. Not from bad luck, but from misreading the catalyst. And the truth is, if you know what to look for, as in the red flags, these setups are actually very predictable. If you're new here, I provide regular catalyst analysis on explosive stock moves and swing trade opportunities. So if you want to develop an edge around using catalysts that drive these kinds of moves, make sure to subscribe and hit the notification bell. In today's video, we're going to focus purely on the red flags that tell you whether a stock is a real opportunity or a trap. Let's start with the catalyst because everything begins there. So AUUD announced that it was granted a patent for AI-based audio processing, specifically removing ads from radio using distributed edge data centers. If you know anything, AI is the hottest theme in the market currently. So on the surface, this catalyst sounds very impressive. AI, infrastructure, intellectual property, all the buzzwords are there. But here's the key distinction. This is a non-cash catalyst. Unlike something like a 100 million contract or a revenue generating partnership, a patent doesn't bring money in today. It only suggests potential future value. So right away, this catalyst falls into what I call a story catalyst, not a hard catalyst. Now, the second thing is what I call the institutional stress test. So this is where most traders get trapped. They stop at the headline, but what you need to ask yourself is, how would institutions view this? One of the things they look into, especially for a small cap like this, is credibility. So for the case of AUD, the trailing revenue is around 15 to 20K. And despite having multiple patents already, they actually had 14 ones before this one, the company hasn't been able to convert those into meaningful revenue. That history tells us something about this company, and that's how an institutional analyst would look at it. So the question becomes, why would this new patent suddenly change everything for this company? Now, another thing they look into is the funding gap. So this is one of the biggest issues for this company and a major red flag. AUUD had or still has a very limited cash runway. And in small caps, this matters a lot because companies need to raise money to survive. So when you see low cash, no revenue, and a flashy announcement, that often signals a liquidity event. So not a really business breakthrough. And another point they look into is the counterparty. So is there a counterparty associated with this catalyst? In this case, there was no customer attached to the news, no partnership, no contract, no incoming cash, just a patent from a patent office. And that's a huge difference compared to real catalysts. Now, the third thing to look into here is the market structure. So the float of the company, short interest, etc. In this case, there was a very low float. This means that the stock can spike very fast on relatively low volume. There was a moderate short interest, so enough to create a pop, but not enough for a sustained squeeze. And there was also a history of gap and crab behavior. So structurally, this is a perfect setup for pump and dump environment. If you compare these elements to what a real catalyst look like, real catalysts or high quality catalysts are stocks with real contracts, with real revenue and real cash inflows. Those give you a fundamental valuation anchor. But in the case of AUUD, there's no way to calculate any fair value. So you're not trading fundamentals here, you're trading the hope that someone else buys the story after you. And that's when it becomes very dangerous. And now the very last thing that's going to confirm that this is really a pump and dump is watching the open. And this is how I kept myself out of the trade and saved myself a lot of money. Back to the chart here. So this is the 5-minute chart and this is the daily chart. What you can see here is you see two green candles on actually good volume. But this is the thing. This is very critical because it's a low float stock. You might see strong green candles in the first 10-15 minutes, but that does not mean institutions are buying. It's often just retail momentum and early flippers. And this is why for setup like this, avoid entering early, avoid entering the first 15 or even 30 minutes. What happened here is two first 10 minutes to first 5-minute candle, very, very strong on good volume, and the move is pretty decent, 35% the first 10 minutes. But this is where the lesson comes together. What you can see here is the third candle here is the wick of betrayal. This wick here shows that every push higher was met with heavy sell-in. That's distribution, that's not accumulation. And the volume on this candle was also pretty high. But the final confirmation comes from this candle here with the highest red volume that dominates the green volume there. So that just means aggressive selling pressure, and the story wasn't strong enough to sustain the move. Unfortunately, this was a trap. Anyone buying the breakout got trapped almost immediately, and once the stock lost these key levels, it turned into a liquidation event, basically everyone rushing for the exit at the same time. So all in all, one of the main takeaways for me about this particular stock is that patent, especially with small caps, is often used to create excitement, increase volume. It's really the pump and dump thing. So provide liquidity for sellers. If it sounds sophisticated, if it's tapping into the hottest theme of the market, if it's related to AI, technology, innovation, but it doesn't bring in real cash, this is a trap. And the other takeaway for me is that you can often tell if it's going to be a pump and dump by the quality of the catalyst, but also by watching the market open. And lastly, avoiding bad trades is just as important as finding good ones. If you found this helpful, make sure to subscribe and hit the notification bell, and let me know if you want more breakdowns like this. Thanks for watching.